Meta and Snap both debuting new AR glasses this month, part of a broader effort to expand wearable technologies. So how is the market responding to those launches, and where do we go from here? Here to discuss, we've got Brad Erickson, RBC Capital Markets equity analyst. Thank you so much for being here with us, Brad. I want to start on Meta. What is your single biggest takeaway after we got the announcements about their Orion glasses this week?
Yeah, it's probably not what you're expecting. I think our biggest takeaway was they're going to keep spending money on this stuff. You don't show a prototype that's not ready to go at a huge event like this if you don't expect to continue to spend a lot more money on it. And the read through from that, if they are going to keep spending that much money, is the quarter is going to be really good. That was our biggest takeaway.
Brad, I guess then when you compare that to the street's reaction, does that make sense? And I guess when you're trying to figure out and factoring in just how long it's going to be until we see some sort of trickle-down effect, what do you think that looks like?
Yeah, I think what's going on right now is that there's a interplay between, again, how much are they going to keep spending on AI, to some degree the metaverse, but really more AI and all the compute intensity and the GPUs they're buying. The interplay between that and then obviously what the revenue growth of the company is. And I think management in this case recognizes that they can't just go spend an unlimited amount of dollars unless the business is growing fast enough, right? That's what they need to keep investors on board underwriting these investments for the future. But our take was that they are going to continue to spend. And so the positive read through to the revenue trends in the quarter and for the foreseeable future.
Brad, you're right. I am surprised, especially because of Meta's history over the last couple of years as being really defensive, having this fortress balance sheet, saving a lot of money. And I'm hearing you say that you like the fact that they're going to continue to spend on a product that right now we've got a lot of question marks around. Why do you have so much faith in them?
So I just think it's part of a broader trend, right? Like I don't cover NVIDIA, just to be clear, but so long as demand for their GPUs is incredibly strong, that's coming from a place of strength for the hyperscalers, right? Amazon's AWS business is back to growing almost 20%. Google search at a huge scale is still growing, nicely in kind of the low double digits. Meta grew 27% a couple quarters ago. Right? So long as those fundamental trends are good, it gives them license to go out and keep spending on this. And thus, we kind of view the spending as sort of like the tip of the spear indicator. If you were to detect any sort of pullback, it probably is coming from the fact that maybe revenue growth is slowing. We haven't seen that yet. So that's a good thing at this point.